So, now this is the last topic, banking institutions. Now, look how complex our banking institutions are, you probably did not know. The Indian banking system, this is the data that I collected in the year. This is from a couple of years old, branch banking statistics 2009, 3 years old. What you have here is very interesting. The first line is scheduled banks, non-scheduled banks. I will explain that to you. There are some banks in India called scheduled banks, some are non-scheduled. Non-scheduled banks hardly exist, except for the cooperative banking sector. Now, on the scheduled banks, you have a group of banks, I will talk about them, called state cooperative banks, the first branch, state cooperative banks. They exist, these cooperative banks exist in India since the early 20th century. 1907, I think, they were first formed. 1907. State cooperative banks, you don't have no idea about these banks, except somebody coming from semi-urban areas or rural areas would know. Then, of course, you have the commercial banks. Now, if you follow the commercial bank tree, it's very obvious. What you have is, there are two types of commercial banks in India, Indian and foreign. In 2009, there were 32 foreign commercial banks. I have the number in a bracket there. Then, under Indian, there are two groups again, public and private. Okay? Kotak Mahindra, ICICI Bank, these are all private commercial banks. So, you have public sector banks, which are government nationalized banks, and this. Private sector banks in 2009, as per this branch banking statistics data of RBI, there were 22 of them. It is very interesting. Indian private banks were only 22, foreign banks were 32, 10 more private banks. Foreign banks are all private banks, 32, and Indian private banks were only 22. Earlier, before independence, there were lots of private banks. They were all put together and they were nationalized. Private banks did not exist in India for a long time. Now, they are coming up again. Then public sector banks, you have very funny 4 items, probably you know some of that. SBI and subsidiaries, I have written 6 plus 1. Earlier, it used to be 7 plus 1 or something. But SBI and its subsidiaries, like the State Bank of Hyderabad, State Bank of Travancore, etc., etc. There are all State Bank of Mysore, subsidiaries of State Bank. 6 plus 1, earlier when I started teaching this course, the data was 7 plus 1, but now it has reduced 6 plus 1. So, their numbers keep on changing. Then you have the nationalized banks, all the nationalized banks which are called public sector banks, other than State Bank, Bank of Baroda, Punjab National Bank, United Bank of India, United Commercial Bank, there are so many of them. Okay. And that number there is 19. So, that is interesting, it has gone down by 1. Earlier it used to be 20, 28 in total. State Bank and other public sector banks together and subsidiaries of State Bank, their number was 28. It has gone down. Okay, maybe they are merged. It is not they liquidated the banks or wind up of banking. No banks would wind up. Then other public sector banks, there are some public institutions, others. I know only of one, the IDBI. IDBI is a public sector organization. It has a bank. Also, IDBI Bank it is called. So, I know only of one name. You may find out. Sometimes I am wrong. So, I know of only one. And then you have regional rural banks, 86 of them. There used to be over 100 when I started teaching this course. Regional rural banks have gone down in number. So, what is happening in the banking sector? The numbers are changing. Gone down means what? They were merged. Okay. Regional rural banks are the ones whom I think we call them in local language Grameen Bank. They were created at some point. They were not there during independence or during the planning era. They were created. And how they were created, I will talk about them. They primarily serve, there are commercial banks, they primarily serve the rural population. So, this is something in excess of NABARD and in excess of or beside the state cooperative banks and other cooperative banks. They also serve primarily the rural areas, cooperative banks. So, in rural areas, therefore, you have three kinds of banks. The branches of public sector banks, then you have regional rural banks, then you have cooperative banks. And on top of that, there is a non-bank which is famous, NABARD, which is a non-bank. NABARD is a financing organization, development organization. Previous topic I talked about that. So, this is what you have, but if you go to the non-scheduled banks, there are three types. The commercial non-scheduled banks were only 4. Commercial non-scheduled banks were only 4. Non-scheduled banks, commercial banks, if you see the row there, commercial banks were only 4 non-scheduled banks. What is scheduled non-scheduled banks? I will explain that to you. And then you have very active non-scheduled banks. They are called non-scheduled banks, though the names are not always banks, because cooperative societies, even if it is a bank, often the name is not a bank. For instance, you have Central Cooperative Bank is all right, the word bank is there, but you have primary credit societies, PCS. Primary credit societies, a primary agricultural credit society, PACS. These are banks in the cooperative sector, in the cooperative banking department or sector. I will talk about them also at the end of this topic. So, now let us start talking about the other features, details. The first thing you would like to know, which I have been referring to often, is what is a scheduled bank and what is a non-scheduled bank. All right. The scheduled commercial bank, etc., all refer to the second chapter or second schedule of the Reserve Bank of India Act of 1934. Reserve Bank of India Act is like a book. It has a chapter, but they are not called chapters, they are called schedule, etc. So, this is schedule, second schedule of the Reserve Bank of India Act, which says that to be eligible to become, to eligible for what? To eligible for being a scheduled commercial bank, there are certain conditions you have to satisfy. You have to have a minimum paid up capital. Those days it was only rupees 5 lakhs. Minimum share capital of your bank must be 5 lakhs those days. It must have been reduced. Paid up capital is nothing but the share capital of a company, of any organization. And I told you commercial banks are corporate entities. Then it must satisfy the RBI, the bank must satisfy the RBI, that its affairs, that is how it runs the bank, how it conducts its performance itself and how the performances are, that they are not detrimental to the interest of the depositors, that they are not harmful for the depositors, because depositors are supposed to be God to them, because depositors deposit money and therefore, you run your banking business. Now, often what you find in Indian banks is that depositors take a back seat, banks misbehave with you, you lose your money sometimes, they do not open on time, all sorts of problems were there. Now, they have gone away a lot of that, but they used to be there. So, second point is a general qualification is that you need a certificate from RBI that RBI is happy the way you perform. So, RBI must have sent staff to check, inspectors like people to check how the bank is being run. And then finally, it is important, which is in connection with the first point, that the paid up capital must be rupees 5 lakhs, which must have changed now. In the Reserve Bank of Act, it was 5 lakhs. Now, a bank cannot open with 5 lakhs. Individuals have more than 5 lakhs. Depositors. Bank share capital 5 lakhs is nothing. Even 5 crores is nothing. So, maybe 100 crores or 200 crores or something they require as a paid up capital. I do not know. So, there it says that it must not be a single ownership or partnership company. So, I and you cannot open a bank. It has to be a corporation, a corporate company, where there is a paid up capital, share capital is subscribed to by whoever, etc. So, it cannot be ownership firm. This is the important thing. So, among these three, the technical things are like it cannot be ownership firm, so it is a corporate company and therefore, there is a paid up capital and you subscribe to is all right. The most important feature is that it must satisfy the RBI that its affairs are not detrimental to the interest of the depositors, that the depositors function properly. All right? Okay. I mean, the banks are functioning properly. Once you have the status of being a scheduled bank, which some cooperative banks have and most commercial banks have, then you get many benefits out of it. You get concessional remittance facilities from RBI and other SBI, other fellow banks. Then you have borrowing facilities from the RBI, but it also becomes strict, but the CRR obligations have to be met if you become a scheduled bank. Met means what? If 7% is CRR and your net deposits show some rupees, that rupee amount has to be deposited. Now, you compare this with a non-scheduled bank. CRR is still there, but they do not have to keep the cash with RBI. Neither RBI bothers to help them out much. Quid pro quo, exchange relationship. You keep your CRR with me, I give you the status of scheduled commercial bank because how you perform etc. is all right. Then also I help you out in distress when you need money. But non-scheduled banks are usually not helped out so much, helped by RBI. Okay? And they cannot borrow on a day-to-day basis. In emergency, they may borrow, I do not know, non-scheduled banks from RBI still, they borrow. But in day-to-day basis, they do not borrow funds from RBI. So, SLR, you know, SLR you do not have to, you have to show, you do not have to keep with RBI, but CRR you have to keep the cash in India. So, SLR is the same thing for scheduled banks, non-scheduled commercial banks, is more or less the same thing. All right. Now, I come to the other part. What is a commercial bank? Somebody can ask. I explain scheduled commercial banks first, because I often refer to that. And hardly there are non-scheduled banks in India today, except for the cooperative banking sector. Commercial bank 2-3 पड़ा हुआ है. आप recent data लेंगे हो सकते हैं there are 2 we will find 2 or 3 non-scheduled banks. I am not talking about the unorganized sector. Remember, there are lots of non-scheduled banks. I am talking about the organized sector, not unorganized sector, not the Shettyars and the other, Multans and Shroffs, etc. I am not talking about their banks. Okay. Gujarat, Tamil Nadu, they have age-old, century-old banks. Now, what is the function of a commercial bank? What do you mean by a commercial bank? Essentially, commercial banks interact with the public at large, So, it interacts with everybody, household firms, other non-banks, etc., other banks, fellow banks, etc., and even government, they interact. And the interaction takes various forms. It may be accepting deposits, it may be creating credit. I told you, they have a corpus of this much, they create a credit of that much, because they release the funds to the borrowers slowly, expecting the funds also will come out in between, in the meantime. So, this much money creates credit, like a multiplier effect it has, called credit multiplier. Okay. So, they give out loans, various kinds of loans, term loans, demand loans, just like deposits, term deposits, demand deposits. They give out loans, term loans, long-term loans, 15-year loan, housing loan, etc. बहुत लंबा होते हैं, or even durable goods loans is the cars. You have an EMI for 10 years. All right, long-term loans. Demand loans are there. Companies usually borrow them. Okay. Then they offer remittance facilities. These are typical commercial bank activities. Remittance facilities. They offer safe deposit vaults to keep your precious items. Some people prefer to have a safe deposit vault, not keep ornaments at home, but keep them in the locker if they do not need it. Often do that, people do that. From our money market chapter that they do sell CDs to mobilize short-term funds, certificate of deposit, you have learned that. They sell CDs. Then a very important banking activity in India today and has been throughout is the call market activities. They participate in the call market by either borrowing money or lending money. And one of the biggest lender in the call market I told you is the SBI. It has huge amount of cash usually. It's the largest commercial bank in India. So they often act as a lender, not a borrower. Other commercial banks borrow. All right. Then the discount bills, for instance, commercial bills, commercial papers, which are not their jurisdiction, but they discount them. I talked about commercial papers, they can have a secondary market. Commercial bills, bill being created in Kanpur, somebody buying goods from Madras. So commercial bank comes into the picture, they discount it, etc. All right. Then an important activity, I am coming to those activities and data also, commercial bank data I will show you, is that they invest in government securities. Often it's a captive market because SLR requires all kinds of securities. Government security is one of them. So they invest, and also they invest in government securities because banks cannot invest in the stock market. That's speculative investment. You cannot play around like a lucky draw. थोड़ा तो कोशिश करो तो कितना रुपया मिले स्टॉक मार्केट में आज कुछ डाल दिया. You cannot go for speculative investment with public money because if you lose public money, people's money. Your money you can play around with. It's not your money you have. It's people's deposits you have. So they invest. Therefore, naturally, they like to make some money on idle cash instead of lying around. So they invest often more than what is required in government securities. Because they are, gilt edge market. They are zero risk market. So there is always no question of default. No question of non-payment. So they go for government market and semi-government organizations. All right. Acha. Then they set up mutual fund schemes. They have also what you call in microeconomics, they have diversified their activities, just not commercial banking activities. Then commercial banks have also gone through subsidiaries. They open a subsidiary account, subsidiary company to specialize in activities. What are the specialized activities commercial banks have been doing? Not all of them, some of them. Mutual funds, number one, primary dealers they have become. There are standalone primary dealers, there are bank operated primary dealers also. I told you in the last topic. Primary dealers have become very important in money market. RBI doesn't do the job. RBI has given it to the primary dealers. You do it. Earlier RBI used to do that. Open market operation, RBI would conduct. Selling of government treasury bills, RBI will conduct. Government needs funds. Now primary dealers do it. Banks have also gone into that. All right. Then they do a very interesting thing. There is something called National Housing Bank, which is no bank. It's called National Housing Bank. Here loans come, money comes from various sources, RBI, government, etc. Housing loans. You know how the housing loans are actually disbursed? National Housing Bank housing loans? Through commercial banks. So commercial banks give you money to construct a house, which is the National Housing Bank loan. They execute that, all right? Okay. And they are, I'm coming to that, they have had and they are performing a very important function is that the commercial banks in India, particularly the public sector commercial banks, have been instrumental not only in providing funds, but in many ways in setting up all these Grameen banks. Where do the Grameen banks come into existence? They were the children of primarily the public sector banks in India, all right, primarily. But public sector banks alone didn't do it. They had help from RBI, they had also help from government. So I will talk about the creation of regional rural banks, RRBs. So commercial banks are involved not only in conventional commercial banking activities, but also in many non-conventional activities these days, or for a while, for quite a while. Okay. Another one I have mentioned here, let me mention before I go over, commercial banks were one of the commercial banks, I think Canara Bank was one of the earliest commercial banks, or the first commercial bank, a first institution to set up what is known as the venture capital funds. Have you heard of VCF, venture capital funds? No. Venture capital funds are when the normal lending institutions are shy to lend money, because suppose you are trying to develop a product which is not known, which is completely new or very new, and you are unsure about the market. Now, you go to a bank and say, I need some finances to set up a unit to manufacture this item. Commercial banks, etc., who are the conventional lending agencies in a country, in any country, just not India, in any country, often say, sorry, I don't know your market, I don't know what the return is going to be. So, I rather not put my money, risk my money in it. Then where do they go? A country and economy often depends upon these kind of new products, because tomorrow they will become famous products. Who knows? Today they are absolutely new, but tomorrow they might become famous products. Or I say for the early generation computers, I don't know who invested in computers. There must be institutions. If you look up US economic history, you will see there have been very, very few institutions, lending institutions, who invested money in it. People were scared. They didn't know how much computers would sell, whether they are good or not. For instance, that Xerox machine, Xerox had the earliest computer. Who invested? Nobody probably. All right. So, now venture capital funds exactly do this. They are organizations who have come to develop in the world, who risk their money because they have a very specialized, special skilled people whom they hire, who can foresee what kind of a market this product can have and whether to put in money there or not, which normal staff of a bank, like the managers, etc., that you see, are not equipped with or trained to deal with. All right. So, they may have a couple of IIT engineers, they may have a couple of IIM graduates, Harvard graduates or whatever, who can judge what kind of a market it can have, what future this product has, and then they go and invest. So, one of the earliest venture, in fact, the first venture capital funds or firm that was created was a subsidiary of one of the commercial banks, which is the Canara Bank. I have forgotten the name. There is a book in the library, you can get it, where the names are mentioned. So, they have gone into venture capital funds. They have also, banks have also gone into subsidiaries, through subsidiaries, merchant banking activities. Merchant banking activities, I told you, they essentially deal with underwriting of shares. So, a company selling shares, and then you go into merchant banking activity. Yeah, there is a whole lot of legal issues involved in selling of new shares, not secondary market shares. Secondary market shares are not merchant banking activities or underwriting activities. Secondary market shares are sold through somebody, people called, middlemen called brokers and dealers. But primary shares I am talking about, there where merchant banking activities have become important. Banks have gone into that. Some famous, world famous banks are also merchant bankers, you know, or investment bankers. Many world famous banks have also gone into that, Citibank for instance. Then you have specialized merchant bankers who do many things, just not merchant banking activities, like Morgan Stanley, etc. Then one of the most successful merchant bankers, I have been told, and some of IIT economics students have joined them. They are working there, IIT economics students, MSc students, first year in particular, they joined. Deutsche Bank, the German bank, is a commercial bank, but it is a large business. It has had large business in merchant banking activities to subsidiaries. And IIT Kanpur MSc students have joined. I know some of the people also. One of them even worked on a 5th year project under me with my guidance. Very little guidance I had to give him. He was very bright, but he did it on his own. So, commercial banks are doing a whole lot, right? They are not like what our grandfathers saw as commercial banks in India. The world has completely changed. Okay. Now, I come to a couple of very important things, which as a student of Indian economics or Indian banking system, you should know. So, I am going to take up one by one or two things before I go to the cooperative banks, etc. the banking other structures. This is something which was floated in late 60s. I don't think you were there in late 60s to witness this. But even I was there, but I don't remember, so young. But later as a student in college, I came to know these things exist. This is famous and still running, and if you open RBI site, you will get a lot of information on that. There are reviews and reports still pouring in online. This is called the famous RBI's lead bank scheme. This is the famous lead bank scheme, RBI's. Okay. Now, this lead bank scheme was launched in 1969, and essentially what happened in the banking and the non-banking sector development, both RBI and the central government were together involved in formulating the projects, then conceptualizing it, then giving it a shape, then funding it. IDBI was funded both by RBI and central government. They all came into existence after independence. Lead bank scheme is one of the things that they did. Essentially, the objective here is to develop the commercial banking sector in, with an eye on what they call, they're called commercial banks, but they would do something called social banking. They would become suddenly social animals, social banking. Okay? Social banking. Now, let me explain this. This whole business of social banking and lead bank scheme, they go together. What is this social banking? Social banking is like for instance, I work for somebody, I earn a money, I have a decent living. Now I have to do some social work. So what I do some charity business. I meet underprivileged children in the weekend and teach them for a couple of hours without any pay, often, without any pay, no return. I do extra for society. So in India being an underdeveloped country, India is an underdeveloped country, there, if you are only profit oriented, then you would give money only where you can make profit, and you won't look after, say, the small farmers, marginal farmers, rural artisans, the poor, or somebody is unemployed, you got together and trying to construct a project or something in the urban areas, and you won't help them. All right? So now this headache of how to develop the country, concept is all right, but I don't know how successful it has been. They all become successful. With this providing banking services, this is what I have written in my notes, I will give them to you. Providing banking services to the economically backward areas, socially underprivileged sections of the society, such as the rural poor, the marginal farmers, etc., the lead bank scheme was conceptualized. All right? Now, what this scheme is? Okay. Let me explain what the scheme is. As I told you a number of times, RBI's method of operation is like this. They form an inner group called the working group or something. Like at IIT, we form committees. Faculties often form committees. Director appoints them, deputy director appoints them, whoever. These committees look into this. Suppose a committee was formed, it look into the temperature control of lecture rooms, because we found they are very uneven. So committee is formed. Now, for the lead bank scheme, before it was initiated, an inner group called the study group or a working group, and under famous chairmanship, if that person is there, the Gadgil group, D.R. Gadgil was one of the most respectable Indian economists. He was a wonderful writer, very bright man. I think under him, this is something called a lead bank scheme was initiated, which conceptually they call that an area approach. Conceptually they call it an area approach. conceptually they call this an area approach. So what they would do, they would focus on an area. Arey, wo area to bahut kharab hai. Okay, study karo. Like a research student, a scholar, focuses on that area. How many people are there? What do the people do there? What is their income? What is their source of livelihood? What kind of crops can they go? What are the geographical conditions? All right. How much of banking health do they have? Do they know banks? How many of the percentage of the population have an account? Often people don't have accounts. They never had money. So how can they have an account in a bank? So they have a very area approach, which is the basis of the lead bank scheme, where they would take up and do a study. Okay. So what it does is that essentially that the scheduled commercial banks, and here is very interesting, the scheduled commercial banks, just not lead bank scheme, Government of India or RBI has made it a rule that in case of lead bank scheme, it's like a commitment every commercial bank will have. And if you are a Deutsche Bank or a Citibank or a Hong Kong Bank or Standard Chartered, it doesn't matter, you have to do some lead bank scheme here in India. It's like a must, like some social work you have to do. You do your business, whatever business normally you do. In addition, you have to do that. All right? Okay. And often in that lead bank scheme is just the commercial banks who were important in implementing the scheme or formulating the scheme for local conditions, for local banking. All right. But they have also involved the players at the ground level. Who are the players at the ground level in a rural area? Cooperative banks. Maybe NABARD have gone into that at some stage through lending, through a branch of a commercial bank. Otherwise, cooperative banks, and there are other important players, in fact, who are notorious ones whom they want to eliminate. They have not been able to eliminate through these lead bank schemes. They have not been able to eliminate, but they want to. And you know who are they? The private money lenders, the main players at the ground level. Okay. So I guess you understand what I'm saying. They go and study the local conditions. So there's an expression, let's say, when a lead bank scheme operates under the guidance of a particular commercial bank, and commercial banks are given districts. Say कानपुर डिस्ट्रिक्ट का लीड बैंक कौन है जानते हैं? मैं ये कमर्शियल बैंक में गए थे जब मैं नोट्स तैयार कर रहे थे बहुत साल पहले. दिस इज अबाउट 15 years back. I was preparing some notes. First time I was asked to teach an Indian economics course, and I hope it is the same thing. कानपुर एरिया का लीड बैंक है, हर डिस्ट्रिक्ट का लीड बैंक है. कानपुर डिस्ट्रिक्ट का लीड बैंक है बैंक ऑफ बड़ौदा. बैंक ऑफ बड़ौदा को ब्रांच में देखा नहीं, लेकिन वो है लीड बैंक. Very interesting, not state bank. So every district has a lead bank in India, and over 500 districts are there. How many banks are there? So therefore, per bank there are about over 500, and how many banks did you see? 30 plus private sector banks, public sector 20 plus, 50 plus, not even 100. So at least 5 or 6 districts are there under each bank on an average, if you do an average. But not the same place, not in the same state. One in UP. These are national banks. So one in UP, one maybe in Madhya Pradesh, one in Himachal, who knows, one in Tamil Nadu or whatever. There are districts to take care of. And this banking, where it involves not only plans but takes into account what kind of, I've forgotten to tell you, not only takes into account what are the commercial banks that already exist in helping, so that they have a consolidated planning, one centralized planning about it, to go about developing an area, a district for instance. They not only take into consideration or involve the participants like other commercial banks or cooperative banks or NABARD, but they also bring the non-banks if they are around, other non-banks. There are various kinds of non-banks in India, to bring them in. They involve them too. So all institutions, all all relevant institutions are considered in the lead bank scheme, and this leadership is given by one commercial bank who is allotted a district to do it. So this togetherness of and approaching a problem, all getting involved, is known as, using these words because you may come across in books, this is known as consortium banking. Again, another word has come, consortium banking. Consortium essentially means that, you know, big private sector companies today have use or banks in order to fund a private sector company, say a thermal power project somebody is constructing. Often the consortium banking concept is used there. In that funding process, financing process of a mega project, is often not one bank is involved. 2, 3, 4 banks are involved who lend the money to the company who is constructing or who is in that mega project. All right, say take the case of Tata's nano project, all right. There must have been a consortium banking. Or you take the case of big that are Reliances, that hydrocarbon, that gas, etc. They're exploring. Must be consortium banking involved. So here this is a consortium banking approach. So what it does, it involves a number of parties together under the leadership of one commercial bank. And to go about and develop a particular district, which is usually the objective is, of course, the district is unbanked, means there is no bank. Often in rural areas there is no bank. Or underbanked, that means there are not sufficient branches. And of course underdeveloped, and there are credit gaps. This much money is required, nobody there to help them. There are credit gaps. You require this much money, but they are not players or lenders who are available. So the lead bank scheme essentially has multiple objectives there for tasks. It has to not only have a plan chalked out for the development of a district and how it will be funded with the help of all participating agencies there. In order to develop the banking practices, it will go into very small accounts, small savings accounts where little savings of people should come in. So it has to mobilize the deposits, whatever little deposits that exist. Hitherto maybe they didn't have any banking, local people didn't have any banking habits, so they never put their money in the banks ever. All right. Suppose this Narega Wagara jo chal raha hai. This is often operating through the banks. And people who are coming to banks to open their account and activate and get their Narega funds deposited are commercial banks. They are involved there, all right. So it has to mobilize deposits, it has to look after the weaker sections, it has to look after bank as an important organization in framing and ensuring development of a particular district, etc., etc., all right. Now I have a very old data, is that which said that the lead bank scheme approaches the problem through a bank given the leadership role in developing a district. So what they do, they prepare something called a district credit plan. What they do is something called a district credit plan. So a district credit plan is something which is to be created for a number of years, but of course they have to be revised as things change. So what they do, the lead bank, is they prepare the district credit plan with the help of all other funding organizations around. Okay. Now, in a book a few years back, about 8, 9 years back, I found that the district credit plan, at least for all districts in India, have been formulated. The question is whether they are getting implemented or not. And you have nearly 600 districts or something in India today. With the formation of states, more districts have come. All right. So, this is what the lead bank scheme is, and if you want to read up on lead bank scheme, its reviews, like how is it functioning, who is doing better in the leadership role, enormous amount of literature available, enormous amount, even online it is available. RBI has regularly annual report jo hota hai RBI ka, there is a chapter on lead bank scheme in every RBI's annual report. All right, let me stop it here. I have to go over to, there are some follow-up schemes that have developed after the lead bank scheme came in 1969. And the two follow-up schemes that I will take up tomorrow, one is called action plans, one is called service area approach. The two follow-up schemes or lead bank scheme, all right, that have come to strengthen the lead bank scheme, I need to take that up. I know it's descriptive, but you should know as a student of Indian economics here. This is very much Indian, this social banking concept, a lead bank scheme, all right. Don't think social economic activities are uncommon in other countries. In USA, for instance, if you go, there is something called welfare payments, unemployment insurance. We don't have that much here. But we have social activities through this kind of a thing. All right, social banking like lead bank scheme, etc. So, we need to take that up. So, I will do that tomorrow, and I will also talk about the regional rural banks. After that, I have some very important thing to talk about. The details of the commercial banks first, that I need to do, and then with cooperative banks I will close this topic. So, is this all right? I close it now?